Recovery will continue to make backward-looking metrics less relevant for the forward-looking market. This is not my Goldman Sachs voice. And Bank of America Securities warning that a blowout quarter does not mean a blowout market. Here now to discuss all of this and get some stock picks for you, Dan Genter, CEO and CIO of RNC Genter Capital Management, and Katie Nixon, CIO of Northern Trust Wealth Management. Katie, I'll start with you, and I don't want to blow our corporate coverage at CNBC out of the water for the next 3 weeks, because we're going to talk a lot about earnings over the next 3 weeks, and some certainly, the Teslas, the Apples, they're going to matter like they always do. But as a whole, how much more will the guidance matter versus the backward-looking numbers this quarter?
Well, Brian, thanks for having me. And I couldn't agree more with your premise here that the guidance is going to matter quite a bit. And it's not just guidance on the top line, on the growth outlook, but it's guidance on margins. We've heard a lot over the last couple of weeks about inflation pressures, supply chain issues, being perhaps a dampener on margins. So I think it'll be really important to hear from companies about their forecast for how transient some of these pressures may be.
Yeah, Dan, because a lot of these companies, and I think I'm going to use the official word here, are going to have to guess, right? I mean, we've heard this from many companies. Corporate visibility into the next 3 to 6 months or year is hard because and there's parts of the country that are wide open. We know that. There's people here that are, we're still not. So these companies are really going to have to kind of take a shot in the dark even on their guidance.
Well, I think that you're right, Brian. And the good news is that the company managements for especially these large public companies are very experienced. Again, it's not the first time they've dealt with difficult times, even though this might be unprecedented. And so I think that what we're getting in guidance, as Katie mentioned, is that we've been given very conservative guidance by companies because they know how devastating it's going to be, especially at this level of multiples for the market, to miss and to disappoint. So we think that we're actually going to have a good earnings season. Certainly there might be some notable misses, but for the most part, people have been so conservative. We think the top line will be good. We'll start to see some expansion in margins. And clearly from a pricing standpoint in the market, we just being turbocharged in essence by this life preserver that we have in overall stimulus that's going to continue. So even though we're concerned about the multiples, we feel the earnings are going to continue to go forward, and again, we're going to have that support base, and that the market will continue to be at these reasonable levels unless we get a break in earnings. Then we're going to have to deal with it.
Katie, I'm gonna throw this one at you. Just crossed, and if you don't want to wade into it, I totally get it. This is one of the weirder headlines I've seen in a while. James Bullard of the Fed apparently is saying that 75% vaccination rates, I'm assuming he means of everybody, would allow for a taper debate. I find that odd because that would be about 125% coverage in terms of natural exposure plus vaccinations, even more than Fauci. But that aside, a Fed official is now commenting on vaccination rates as it pertains to when yields or the Fed funds rate may start to move. How do we read into that?
Well, we're all epidemiologists now, aren't we? Which is so interesting.
Yes.
I think the debate on tapering is going to start in earnest as we get past what will be doubtless very strong numbers on both the growth and likely the inflation fronts. The base effects will be strong. The data is going to be noisy, but directionally, we're going to see stronger results on the macro front. And so I think it's natural that we'll start to have this debate about when we'll see tapering. Now, most of the other FOMC members who have weighed in on this have sort of looked at a calendar-based we'll wait to the end of the year. That will allow us to see how much of what's going on is transitory and how much is not. So I think most investors are focused on the end of the year as being the beginning of the discussion. So that's interesting news, certainly out of Bullard today.
It is, Dan. By the way, you got some picks. I'll give them. Phillips 66, Lincoln National. Thank you for those. But I want to keep going on this because we have a Fed official. Yes, we're all amateur epidemiologists now, who's basically giving you the timeline. That's why it's important. You can look at and by the way, every single night I post the vaccination numbers to my social. We all know that, and I've been more optimistic than most. He's basically telling you when we may get, if you just look at the math, like, we do 10 million a week. Okay, you can kind of guess when we might hit that based on this 75% vaccination number coming out of Bullard. By the way, Dr. Fauci said last week we only need 50% vaccination rates. So Bullard's a little more hawkish on vaccines too. But this is an interesting comment from a Fed official on many levels.
Well, I think, Brian, what you're seeing has been alluded to. We're all dealing with the science. We're all trying to look at the science. We're all trying to really interpret that science as how it's going to lead the way. But the reality is that clearly we're going to open. We're going to have support. We're seeing the reopening trade. We're seeing what we're having in earnings and in the employment numbers, and everything is improving. But the reality is that the Fed is not going to act based upon what's coming out in a vaccination report. The Fed is going to act based upon what we have in real numbers. As the economy begins to grow, if we have sustainable growth in both employment, as we look at what the inflation numbers are, and we're going to have a strong GDP. Look, we're likely to have a run rate of 6% as we get to the end of the year. And that's going to be far more important to the Fed and their actions and when they start to unwind than what we're getting daily in vaccination reports.
Yeah, but you got a Fed official on the tape make it a percentage number, which is even more hawkish than some of the most hawkish that we have heard. Either way, good stuff. Guys, both Dan and Katie, thank you for kind of rolling with that curveball. I thought the headlines were kind of interesting. We'll get you back on again soon.